Let's take us back to single stocks and ones we should be watching. So Bloomberg's list of 50 companies to watch in January, we've had that. Now we're whittling it down a little bit. We've got 10 more stocks for the second quarter based on scenarios that are coming out of Bloomberg Intelligence. Let's figure out which ones we should be watching and why they're important. Tim Craighead from BI joins us now. Let's talk about methodology first of all. Why are we... Why these 10 companies? Why are they so important?
So you mentioned the 50 for the year ahead. All of these 10 and the 50 are part of our focus ideas. Our focus ideas have three pillars. One, high conviction fundamental view.
Yep.
Two, different from what the market thinks. So there's a disconnect here that we see. And number three, quite importantly, there are catalysts ahead that we think will bring the market around to our point of view if we're right. These 10 specifically have catalysts coming up in the second quarter, and that's why we've zeroed in on these.
Like what?
So we're here in Europe. 3 of the 10 are European. Standard Chartered, Pirelli, and Accor. So very different. These are across sectors. Standard Chartered, we think that they've pretty well done what they needed to do to take care of their Chinese property concerns. At the same time, we think the market doesn't quite get how good their wealth management business is growing, and they're also reducing costs. Pirelli, we all know the tire company. If you're an F1 fan, all the better. These guys are upgrading their mix. They're getting rid of some of their lower end product. At the same time, they're moving their production facilities to lower cost places like Romania or Mexico. Again, we think that there's upside to profit expectations. And lastly, Accor, it's a travel recovery story that we think continues to sustain, whether it's here in Europe or in Asia. We continue to see higher room prices. RevPAR for these guys is surprising.
Is this a buy list?
Well, we don't make recommendations per se, but these are, like I said, these are all calls that we have a really strong fundamental point of view that we think the market doesn't quite get.
Are there some companies where the market's being too optimistic?
Absolutely. So look at the flip side. 2 of these are concerns. They happen to be China-related. One is CSC Financial, which is one of the big Chinese brokerage companies. There we're seeing new listings, IPOs disappoint, part of it because of regulatory pressure and what have you. We think there's room for a miss here. The other is Chow Tai Fook, which is representative of a broader call that we have on Hong Kong retail, which we think is suffering from all of the woes going on there, whether it be property or otherwise. And also, Hong Kongers are actually going across the border and shopping more in mainland China. And it's creating a disappointment for Hong Kong retail.
All right, Tim Craighead from Bloomberg Intelligence, we thank you so much for bringing us that.